Hello and welcome to Car Dealer Live. My name is James Batchelor, and today we are taking our monthly look at used car values. Joining me, as always, is Cap HPI's Director of Valuations, Derren Martin. Hello, Derren.
Hi, James. How are you?
Very good, thank you. Always good to have you on. Thanks for taking some time out today to talk to us. So Derren, I mean, the last time we spoke, obviously, was last month, July, and that month we had the biggest drop of the year. 1.9%. So how has August fared?
So August, as we predicted, has been quite similar with the size of the drop. So we're continuing to see deflation in the used car market. It's the fifth month in a row. So August live values dropped by 2% on average. So it continues, So it continues to sort of increase, I guess, those drops. So only slightly more than last month, but more nonetheless. So that's equivalent to about £400 on average. Lots of moving parts within that, as we always say, but it's a continued sort of downward trajectory for values, which obviously are still higher than they were 3 years ago because of the increases we saw then.
Yeah, because I know we're sort of all expecting it to happen. Things have got to come down eventually, but 5 months of consecutive growth. I mean, is this the new normal now? We're going to be seeing, every single month there's going to be a drop, do you think? Or could September change that?
Well, no, I think September there will be a drop as well. There's going to be more volume hitting the market, and the demand will peak a little bit in September because it's the end of the holiday season. But I think. I mean, we have to remember that generally used car values do come down. Deflation in the used car market was a fact of life previously. We've had 3 very unusual years. We actually had a couple of unusual years prior to that. 2019, values came down a fair bit. 2018, they were really strong. So we go back to pre-COVID times, then there can be some different nuances in the market. So we always said that there wouldn't be a crash, and it isn't a crash. The values were high, are still high. They're still on average 25% more than they were 3.5 years ago, before that sort of fascinating 2021, unprecedented. So values are still high. So and demand in the retail market, it's not through the floor, it's still there, but it's just there's lots of things going on in the country with cost of living concerns, high interest rates. As I say, people going on holiday, you put all that into the melting pot, and it's not really surprising that values have edged down.
Yeah, I just had a terrible flashback then to 2021, where we were using the word unprecedented virtually every single day for things. So, but how has August this year compared to previous Augusts? Has this been a worst August, do you think?
Yeah, it's been a heavier drop, definitely. So the average drop sort of over the pre-COVID years was a sort of a 0.6% drop, and you've got to go back before we introduced Cap Live, the daily movements in 2012. You've got to go back further than that to see a movement like this. So 2.4% in 2010 is as far back as you've got to go to get anything that sort of matches this. So it is quite a big movement for August. But as I say, you've got to put it into context that used car prices are high anyway.
Yeah. I know we're deep in holiday season at the moment, although you wouldn't believe that by looking out the window, would you? But that aside, I mean, what has demand been like in August? Is it a little bit? Well, is it flatter than usual?
Yeah, I think so. I guess we have had some unusual Augusts, like end of lockdowns and things like that in previous years, and last year was relatively upbeat for an August. So it is holiday season, but it has been, I think it's been slightly worse than probably dealers expected. We obviously speak to a lot of dealers during the month, and there's not really been any that have said it's gone well for them. Margins are being squeezed a little bit. I think you're getting people that are other people are away, so the demand isn't there. I think the necessity purchase has remained, but maybe above that sort of premium, that more premium purchase, that's slowed down a bit. You've got people's mortgages, fixed rate mortgages coming to an end. I think people have just been a little bit more wary. They're going in to swap a car and realizing that cars are more expensive and interest rates are high. Got to pay quite a lot more on a monthly payment, and they're just being maybe a little bit more cautious. And even walking away potentially. So yeah, it's not been great. on the flip side of that, the wholesale market hasn't been too bad. Although prices have come down, there are vendors that are adjusting some of their sale prices, probably with one eye on September and more volume to come. But the wholesale market hasn't been bad. Speaking to the auctions, conversion rates are in the 60s, and there is demand, especially for sort of those cap clean cars in good condition, but no one's overstocking. You think about how much it costs to stock a load of cars when interest rates are this high as well. So probably it's been okay in the wholesale market. Retail has been slightly worse, I would say.
So with August, have we seen a continuation of this downward trend for electric vehicles, or is it sped up, is it slowed down, or is it still a bit of a cause for concern, dropping used EV values?
EVs have been really interesting. They've actually dropped by 1.7% on average, so that's actually not as harsh a movement as the average. Petrol and diesel have both gone by about 2.1. So on the face of it, that looks okay. And we've actually put some up this month. Some have stayed level, but you have got some that are dropping. And what we've always said is that there's going to be a realignment. Some that haven't dropped quite as harshly in the past. There has to be a natural order of things in the market. When you get too many of them as well, it's all about supply and demand. You've got models like the Mockery, the Peugeot 208, Fiat 500e. They've actually stayed level, which is a good result. You've got the Kia Niro, Peugeot 2008, they've gone up. But then you've got cars like the Q4 e-tron, the Polestar 2's been under particular pressure. They've been coming down anywhere sort of 4, 6, 7%. So the Polestar's come down by 7%. So that has been under pressure. So you can't really talk about an EV market altogether. There's definitely interest from consumers. Dealers are certainly buying EVs again, but they're being selective about what they buy. They're not stocking too many. And as I say, some of them, there's some bargains out there in EVs. They're cheaper than ICE vehicles when you look at equivalents for some of them. But there are others where there's just more volume coming back and they still look a bit expensive. And they're the ones that have been going down.
The Polestar 2 is quite interesting, isn't it? Because I would imagine that's a symptom of more supply, isn't it? They're selling more of them, particularly over the last year or so. I suppose more are coming to the used market and it's pushing values down.
Yeah, it's how the market works. Yeah, as I say, it's a bit of a realignment. It'll reach a point where it looks good value and it will come down. It will stabilize, but at the moment it's coming down. But the Model 3, I mean, that's obviously been a benchmark vehicle, been fascinating to look at all the way through the year. We thought that had stabilized, would potentially have that hockey stick effect, but that's come down again this month as well. And that's based on volume. There's plenty of them in the market. So although they're quite good news retail because they're now at a reasonable price, there's plenty of them to choose from. So you can sort of you don't have to pay those high prices.
The petrols and diesels though, that's quite interesting though, isn't it? Because surely is this just a sign of just wider economic problems, or do you think that's just a bit of a blip that their drop has been worse than electric vehicles?
Well, I think it's because of all the things going on with electric vehicles. You've got to look beyond the averages. So I think it's more than you can't really class petrol vehicles altogether and diesel vehicles altogether. Diesel super minis certainly under pressure. We've seen some big drops in that size for a diesel vehicle. Maybe ULEZ zone hasn't helped with that type of thing. People are a bit wary about diesels. So it's yeah, I think petrol and diesel overall, they really force that average figure. So yeah, it's difficult just to talk about them. There's lots of moving parts, as I say.
Yeah, it would be good if we could just talk a little bit about the problems facing used car supermarkets. We've been hearing from a few companies over the past few months where they seem to be struggling. Are you sort of seeing that as well? And is that a problem that's particularly bad for used car supermarkets purely because of the types of cars that they stock?
I'm not sure if it's across the board. There obviously are concerns in the used car. I don't think it's certainly not all doom and gloom at all. But yeah, I mean, the car prices are high. There's a demand maybe dipped away a little bit. There's an issue getting some cars because obviously there've been 2.5 million less registrations since the since 2020 with the pandemic. So there's a shortage of that nice sort of 3-4 year old car. Lots of competition. I guess there's online competition as well. Interest rates being high is certainly not helped. As I said earlier, that for them to stock them is to have a lot of stock is an issue. They've had some strong margins over a period of time, and they're now coming back down to sort of more pre-COVID levels as well. So I guess it's a little bit of a perfect storm out there, but I don't think it's certainly not all doom and gloom, but just a little bit of pressure on certain areas. Yeah.
Yeah. Well, lastly, Derren, I suppose September is going to be a little bit difficult to predict. Of course, more supply coming in, but it seems to be a bit difficult to get your glass ball out, or your crystal ball, I should say, out at the moment.
Yeah, it's going to be a really interesting month. New car registrations are going to be really interesting because retail demand in the new car market isn't great. Manufacturers are going to want to hit volume. They're going to sell cars. We've already seen some very keen offers on retail in the new car market. They're also going to divert cars to fleets. They're going to divert cars to rental companies again, probably not in the volumes that they used to, but I think that will increase. They'll be selling cars to Motability as well. All of this means that cars will appear back in the used car market from those sources. If you have keen new car offers, that can put some pressure on used cars, especially late plate ones. But on the other side of that, there will be an increase in demand as people come back off their holidays, and tends to always happen in September. So will demand match supply, and also prices are high as well? I think they're the key questions, and I think values will probably continue to drop as they have been for a little while yet. And then once you get past September, you're into sort of the back end of the year. So I wouldn't be surprised if we see some drops, but as I say, not a crash. It's a realignment of values, and even if we had a few months of drops, it's what normally happens in the market, and there'll still be higher prices than they were 3.5 years ago.
Yeah. Well, terrific. We'll look forward to chatting again this time next month. But for today, Derren, thanks very much for joining us.
Cheers, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.